Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. Some shifts have happened on the gold market in recent couple of weeks, probably mostly in the recent week. And today in the weekly report we have tried to understand what to expect in the gold market in the nearest time, what the major driving factors stand here. And by our opinion, the performance of the gold market might be depressed within the nearest few months. Here we see actually three major reasons, three major headwinds for the gold. First of all, markets right now stand in the euphoria of the changing of the Fed policy. As recent statistics shows good economy performance, shows good employment, and the Fed steps in a cycle of the rate interest hike, that makes the psychological effect on minds of the investors, and it works in a direction of the depressing of the gold market. So that's the actually normal effect when the cycle of the interest rate change starting. Second moment, geopolitical tensions and military events, despite how cynic it might sound, but turning to some routine, and makes no so explosive impact on the minds of the investors as it was just in recent couple of weeks probably. And third, which is we think is a major moment, that the problems in the United States economy will be disguised in the nearest time by the money flows from the European Union. Last report we already said that it might be treated as a robbery of the century when the United States imposing of the sanctions, which is more heavily for the European Union actually, which carries major burden of the sanctions, use this moment to possess themselves as safe haven. And investors in Europe, of course, think about safe capital moving out of the European stocks, European markets, and move the capital overseas to the United States. And this process should last for a few months. These three reasons that we have mentioned will make the gold market, put the pressure on the gold market and probably do not let it to show any solid upward tendency. Although we think that demand for the gold should stay as overall geopolitical situation stands tough and it's not yet ready to massive withdrawal of the gold positions that investors have. But that will not last for too long. We think that's closer to the end of the 2022 to the end of this year. We start to see the negative events that comes from the structural problems in the economy of the United States. We think that Fed is too late with the rate change. The rate change that Fed has announced in its report will be too heavy burden for the current economy conditions that the United States show, and negative impact and hard landing in the economy we see much earlier than the end of 2024. This Fed suggests should become the end of the rate hike cycle. Besides, the United States economy, by our opinion, can't absorb currently the 2.8 terminal rate, which will be too significant rate change for the current economy. And closer to the end of this year, that will become more evident. And gold market and investors waiting for the gold market starts thinking about taking the long position again, and upward action could reestablish. But until this moment, gold probably should stay inside of some range that we mentioned in today's weekly report. And that makes us to trade gold probably on the daily and intraday charts within the few months. That's the reality, guys, that we're entering. So from that standpoint, our long-term analysis of the monthly and weekly chart suggests that because of this drop, it probably should get some continuation. And in the next week, we're mostly concerned about the C point of this pattern. So if market starts downward action right from there, and we suggest that C point already stands in place, the next target stands 1785, which is the OP, and where market theoretically could start going within a few weeks. But alternatively, it also might happen that C point will stay a bit higher, somewhere around 1760, 1765, and in this case, OP will be in agreement with the 1827 major fib support. That's actually the question that we need to answer to estimate the potential downside target. So here actually we have the two possible setups. First setup we already mentioned on Friday. It suggests the upward action, minor retracement, and it's mostly suitable for scalp traders on intraday charts. The next primary setup is the downside continuation, whatever it will be. So hence we are considering taking the long position here based on the intraday charts, and then reversing the position somewhere at the C point to possess ourselves with a possible downward action. That's the simple idea. Now about this performance of the retracement, what level market could reach. If we'll take a look at the 4-hour time frame chart, we've got the bullish grabber on Friday, and it suggests that market should take it out of this stop. So it means that it should continue upward action, and grabber suggests that we could get some kind of the ABCD pattern. In fact, it could look like on the hourly chart. So if we'll take a look here in the picture, you could see we've got actually catalyst triple to buy. Market has formed accurate ABCD pattern, and this actually what I mentioned on Friday. We said keep an eye on the fib levels, so you could try to take the long position because overall shape is clear until market stands above these lows, forming the bullish reversal swing, bullish reversal candle on the 4-hour time frame chart. The scalp short-term scenario, scalp trade suggests that you could consider taking the long position. Short-term setup stands bullish. So, and currently market stands at the point that actually should clarify everything. So, if market will be able to stay here and follow to the grabber that we have on the 4-hour time frame chart, we should get ABCD pattern, which with the OP right around 1965, 1970, and it means that market could complete this pattern forming the agreement around 1965-1970 area, completion of this ABCD pattern. And it means that on the daily chart, the C point will be right there, as we discussed, and OP target will be a bit higher. If, conversely, market will not able to hold there, around 1715 starts breaking it down, it means the downward action should start right from here. That's no bullish setup will be formed, and we should be ready for direct downward continuation on the daily chart, but downside performance in this way, in this case, will be not directly forward. It's just because we have the oversold level and market still stands around the confluence. So probably it will be gradual. So these two moments that we intend to keep an eye on the beginning of the week. First of all, for those of you who are considering taking the long position, could keep an eye on this scenario with possible target around 1961, 62, 65. Second scenario, which is a major one, is a downward reversal around this area and continuation with the setup that we have on the daily chart.